How much steam is left in this record-setting rally? Let's ask Liz Young, SoFi's head of investment strategy, with me here at Post 9. Welcome back. It's good to see you.
Thank you.
You think momentum's fading?
I do think it's fading.
Is that how you would answer that question at the top?
Well, I mean, you can look at it even just in a numerical sense. If you look at factor returns and what's happened and break this rally up into pieces, the first piece of it being October to December, momentum led, high beta led, and then you get into 2024, momentum was still leading but sort of slowing down, and you saw low volatility come in as a leader. You saw some quality come in as a leader. And then in March in particular, you have low vol, quality, value, dividends as the factors that are leading. The one consistent factor that had been leading the entire time and continues to is large cap versus small cap.
Okay, let's distinguish here because we could take this one of two ways. When we talk about momentum, you were speaking specifically about the momentum trade, momentum stocks like big cap tech and otherwise.
That's right.
I'm more talking about momentum of the rally itself. Do you think we're still cool, or are we fading in that regard, too? The momentum behind the rally.
I think the velocity of it is fading, the speed of it, the fervor of it, but I don't think that the rally is ready to conk out. I think that there's still room for stocks to continue this rotation trade. The risk that's presented in the near term is the rebalance that could happen at the end of the first quarter. You've got the S&P up almost 10% year to date, aggregate bonds down 1%. That's a really big spread, relatively speaking. So you might see some of that narrow as the quarter ends, but I still think that there's more room for a rally to continue, just not at the same speed.
I mean, the dreaded April 15th looming, too, right? Tax day.
What happens?
I know, I've heard terrible things. I've heard people talk about, that could be an impetus that you could see some selling in the market. Got to pay your tax bill.
Yeah. I think that happens every year, though. I don't know that that's going to be something that really pushes us one direction.
Well, after
or
a big rally, though, right?
After
that's
a big rally,
the context.
If people took their gains last year, I don't know that there were a ton of people doing that. I think everybody rode it quite a bit. And then we got new money that came in and continued to invest in equities. And maybe some of that rotation that's happened this year that's driven more of the rally into other sectors is people taking gains out of tech. But I think people are trying to avoid taking those big gains.
You're getting into a seasonally good period. I mean, April is good, traditionally, according to Ryan Dietrich of CMT. We've had him on. I like what he puts out. Second best month since 1950. Third best over the past 20 years, fourth best over the past 10, fourth best in an election year. So seasonally, you're set up to potentially continue this, and then you obviously have the Fed and these possible cuts starting the summer looming.
Right. Well, I happen to think the Fed is going to be a lot more patient than we originally thought, obviously, but even more so than we think right now. I think that they are going to move much more slowly, and perhaps even more slowly than most other major central banks. And that means that maybe they do start when we expect, but then they keep it on pause from that point, and the whole thing is a very, very slow-moving bowling ball through molasses as they start that cutting cycle. Markets do tend to do pretty well after that last hike and before the first cut. This happens to be a very long period in between that last hike and the first cut. If the Fed makes it to November, it'll be the longest one ever, and it's just going to be this waiting game. So we're waiting for news, waiting for reasons to continue to stay optimistic, and so far we're getting them.